Now starting, all attendees are in listen-only mode.
Hello everyone and welcome to another Backbase webinar. We kick off the year talking about the Uberization in banking, and here with me today is Simon Mathews. He's the Chief Strategy Officer at Extractable. The complete agenda of the webinar is the following. Simon, as the keynote speaker, will kick off and talk about the Uberization of banking topic. We'll spend roughly 30-35 minutes on that. Myself, Jelmer de Jong, I'm a fintech consultant at Backbase. I will talk for 10 minutes about how you can regain control of your digital banking strategy and kind of apply the vision and the best practices that Simon describes in your digital banking stack, in your digital banking technology stack. And of course, we'll close, as you're used to from us, with a short Q&A where we will answer the questions you might have. It's a Q&A via Twitter, so you can just participate on Twitter using the hashtag Backbase. Or you can do that via the GoToWebinar control panel. That's the panel you have in front of you right now. It has a chat option and it has a questions option. Use that to ask the questions. You can do that throughout the entire webinar. I will make sure that during Q&A I will select the most commonly asked questions and make sure Simon receives those and can also answer verbally. Of course, the number one question we always get, will the slides and recording be available? And the answer is, as always, yes. The slides and recording of this webinar will be available within 48 hours after the webinar. All participants, so both joining right now and the people that are listening in, will receive the slides and will be able to forward that in their organization as well. The slides will be available on SlideShare and the recording will be available on the YouTube channel you're familiar with. So without further ado, I will make Simon the presenter right now, and then Simon will be kicking off talking about the Uberization of banking. Simon, the floor is yours.
Thank you, Jelmer. Hello, everybody. This is Simon Mathews. Here we put up a little bit of a picture of me just so that you get a chance to understand where the voice potentially matches to the face. And clearly you can see that at Extractable we're pretty good at Photoshop in terms of improving the image of the people that work here. My role is a Chief Strategy Officer, and that really means helping clients with their digital strategy and how digital experience can drive results for their business. Extractable itself is a digital strategy and design agency. We're based here in San Francisco, and we focus a lot on financial services, although we also do work with some healthcare and some other sort of complex regulated industries. I'll do just one slide about us to sort of kick it off. Really what we do is we focus on creating transformational digital experiences that drive results. So these are things like logged in functional experiences like online banking, which I'll show some examples of, but also things like online medical records and some of these big, complex, sophisticated things. And then also, marketing websites that drive prospects and convert them into customers and some of the tools and techniques there. So that's what we do based in San Francisco, focus on financial services. And that'll be enough of a plug for ourselves. And I'll move on to our topic for the day, which is really talking about Uberization of banking. So here, there's one of our typical kind of Uber drivers, very friendly, happy guy, and I'm pretty sure everyone on this call understands what Uber is or has taken a ride or lives by Uber. What's really interesting about Uber is that the word Uber and Uberization has become a little bit like a verb, a bit like Googling something. It's really becoming this thing where it becoming a word that really means disruption. It's, you hear every time here in Silicon Valley quite a lot, oh, we're the new Uber for, pet care, or we're the new Uber for, whatever it happens to be, because Uber just means disruption. And when we talk about disruption, we mean disruption to the level that the competitors are out, protesting in the streets. I mean, you see protests about Uber all over the world, and there's actually a little bit of a delay here on the slides, but you see here, this is San Francisco itself, which is the home of Uber and probably the highest Uber city. And recently, Yellow Cab itself went bust. I think what's interesting for us is when we start to think about banking, the only kind of protests you really start to see around banking is this idea of, the protests that are around the financial collapse and people protesting the power that banks have. So you see protests like this. Again, another protest in San Francisco. I think we kind of like protests. But ultimately, what I think is interesting is how far can we take this? I mean, ultimately, could you disrupt, the financial industry so much that ultimately, you end up in this situation where, your competitors are actually potentially out in the streets protesting your level of innovation. Now, I think that's probably a little bit of a pipe dream ultimately, but I think it's interesting to say, like, this is the level of disruption that Uber has brought to this market. So what are the essences of that? What can we learn from that for financial services? So today, what I'm going to do is talk a little bit about what is Uberization. Try and break that down a little bit into, what are the essences of it? Talk about a couple of financial services examples, talk about some devices and technologies that are enabled to this, and about millennials, because of course they're our group that is driving the most change. And then ultimately talk a little bit about how we could Uberize ourselves a little bit. So when we start to think about disruption and innovation, so start to use the word Uber to mean disruption and innovation, there's really sort of 4 layers that I see here in terms of the places in which you can innovate. And the real power comes when you start to innovate across these layers. So starting at the top, we have the experience. Now, how do you actually deliver that experience? What's it like? How easy is it to do, to find, buy, and use the product? So that experience, whether that's digital, in person, whatever it is. We have the delivery layer. So this is really, how do you deliver it? Do you deliver it digitally? Have the actual product. What does the thing do? And is it addressing a core customer need? And you have these industry foundations, things that are common across a particular industry that are part of this. So let's use a couple of examples. Let's try and break this down a little bit and look at, say, Uber itself. So when we look at Uber, when it first hit the market, it really was innovating experience. The delivery was just different because it was about an app. It was about, that's how you called it, that's how you paid for it, all of those things. And they were innovating a little bit in the core product. It still gets you from A to B, but they were doing that. What sort of I think is interesting is that over time, they've been spreading and widening their services. So now, they're in this sort of world of different types. They had UberX, they now have ride sharing, where you have multiple people going in the same direction, a whole bunch of new services. And they've even gone as far as doing some quite interesting things. They have this thing where they do kittens and puppies sometimes. So you can, on certain days, they're helping promote adoption of pets, and they have, you can basically order an Uber. You can see here on the screenshot on the right, you actually pull up Uber and it says kittens in the bottom left there. And you can have a carload of kittens delivered to your office. You can play with the kittens and maybe you can adopt one of them. So they're starting to do just interesting things using the same core platform and really extending that experience. I mean, who doesn't want kittens or puppies delivered to their office? They've started with sort of basic things. They've been spreading and growing across these different layers. And I think what's interesting with them is that they're starting to sort of push beyond that. They're starting to change the nature of the industry overall. And, they're starting to research, for example, with self-driving cars. They're doing a lot of work researching that. There's the slide that's coming up now is sort of a press clipping showing some of the talk there. But can you imagine fleets of self-driving cars, the nature of that innovation? You don't have to own cars. The whole nature of transportation could change. You won't need, traffic signals in cities. I mean, the potential there is huge, and they're starting to push that layer down. So they started with sort of some experiential, some had delivery, and they pushed into these different layers. Another example I wanted to talk about a little bit was Netflix. It's another good example of the kind of changes that we're seeing in this world. So, I'm sure, again, pretty much everyone has used Netflix or one of the sort of competing type streaming services, or at least know of it. And, for them, they're in the home entertainment category, and they started, if you remember, by mailing you a DVD. So they changed the model of delivery from being you have to go to the store to rent this to being I get it sent to me. But the key innovation at the beginning was really the experience. Log on to the website, picking a movie, having pieces, having movies recommended to you. They've then extended this by starting to change the nature of some of these shows. So they've commissioned their own TV shows, which are innovative in the way they deliver. So it's not necessarily that it's a new type of TV, but they allow binge watching instead of, you get one episode a week. They allow shows which are different length episodes. These are all little changes which start to change the nature of the industry. And they also, probably the most important thing is the algorithm. So these two guys on the left, Carlos on the right-hand side sitting on the chair, I love his title. It's Innovation and Personalization Algorithm is his VP of that. And so this idea that the algorithm that recommends movies to you is key to them. So innovation in all of these layers down through sort of what Netflix is doing. So those were a couple of examples of just other industries, but let's flip over to financial services and really dig into that a little bit more. So when we think about financial services, there's really sort of, let's say, a number of elements that exist for all of financial services across our layers here. So across our experience delivery, product, and industry foundations. Levels, and these are sort of the boxes. So at the top level we have the experience, which is sort of a universal thing, ease of use, brand, all of these elements. But ultimately we really only deliver things in three ways: via personal devices through digital mobile, via shared technologies like ATM machines, point of sale machines, and other types of things, kiosks, and via in person, so sitting with your banker, sitting with your advisor, etc. And ultimately, money, we can store it, move it, borrow it, invest it, and protect it. And underneath that, we have some of those core layers like money, infrastructure, and a number of other things. And when we start to look at innovation in some of these layers, if you look at money, for example, well, that's places where things like Bitcoin are having an impact. Now, whether or not Bitcoin actually would be a currency or not, I think is irrelevant. It's more the nature of way things like blockchain are starting to allow us to have trust in some transactions that we couldn't before, and that will over time change. That's sort of an example of one thing at that level. If we start to look at a couple of other levels, I'll show you a few examples, some startups and some similar things. We basically have, let's say, for addressing digital and mobile delivery and investing, a couple of interesting things going on here in the US, and I know that we have quite a few listeners today who are international as well, so I'll be using a lot of US examples, but I think a lot of the messaging is universal in nature. So there's a company called Robinhood, which is an interesting startup. It basically does free stock trading. So think about that for a moment. There's been sort of discount brokerages doing stock trading for a long time. They all cost, I don't know, $9, $10, $15 a trade. So this startup is doing free stock trading, which I find fascinating. If you read into them, basically their argument is that they've built a technology stack that is so efficient and doesn't use people, it doesn't have lots of advisors in the way, it doesn't have all of that stuff, that it allows them to make money just on the margin or just on holding the funds, and therefore can offer the trading for free. It's a very simple, elegant experience to use. It's app-based. So it's a sort of almost ultimate example of taking this efficiency that technology drives by being all the latest technologies and delivers for the customer. So it's highly innovative across that vertical, and starting to get some traction here. If we go deeper down on the investment side of things, there's a whole bunch here in the US and spreading around the world as well of what I think are rather unkindly called robo-advisors. But basically what they are is tools that are for long-term investment, typically around retirement or other things, that are focused on really efficient delivery, only using advisors where needed, and sort of low-cost funds, indexing, and using algorithms to invest for you rather than fund managers. So, Future Advisor, Personal Capital, Wealth Fund, all examples of them. And here's a screenshot from Personal Capital. I actually myself moved some money over to Personal Capital and sort of reduced my fee load by about 1.5%, which over a 20 or 30 years for retirement is very significant. But they all start by delivering digitally and then add in advisors as needed, as opposed to the other way around, which is the more traditional financial services model. Let's look at potentially another area. So let's look at, say, money movement. I think there's some interesting things which probably people in Europe here would recognize that are going on. And it's cash out of ATM or cash machine. So I'm showing an example here from the NatWest in the UK. But basically the idea is you enter a code or do something on your smartphone, and then you go near or send it to a particular ATM, and you or someone else can get money out of that ATM without an ATM card or cash card. I think what's really interesting about the innovation here is that it's about identity, because so much in banking is about proving who you are. I mean, that's why you have an ATM card. It's not ultimately doesn't do anything itself. It just proves who you are for account access. And there's some very interesting things starting to go on here, which I think, again, plays to this experience layer. Also, talking a little bit about sort of money movement, we have a peer-to-peer payment service called Venmo, which, again, I think has got pretty good press around the world, and people are aware of it. At its core, it's not particularly complex. You just sort of send money peer-to-peer using sort of a wallet thing. But what's very interesting about this one, I think their innovation is the social side, because when you make a payment, you can add a comment to it or add a detail to it. And basically what happens is you end up with these really interesting social feeds of commentary. And it's very popular among students and some sort of young adults. And you get these hysterical chains of, people go out to dinner, share a bill, and all the commentary around dinner. So they've turned paying for something, which to be honest is kind of tedious, into quite an interesting social, sharing, entertaining thing, and therefore have quite a lot of stickiness with it. So some interesting just sort of different takes on some of these layers. One other one I wanted to touch on was the insurance industry. So here, particularly in the US, insurance is a complex thing, particularly health insurance. Unfortunately, we all have to have our own health insurance here, and it's notoriously complex to do. And there's a new company called Oscar that is doing some interesting things from an experience. Ultimately, the product is not that much different, but the experience is very different in terms of purchasing. So this is their website, and you basically just start by saying where you are, because everything is regulated by individual states here in the US. So in this case, their user is putting in their zip code, and then as they type that, more lines appear, and you just put in some basic details, and what happens is you can then from there go straight into the details. It's just very simple from an experiential point of view, and I think it's quite a powerful change from a brand. I'd much rather interact with an entity like this than sort of a Blue Cross Blue Shield type world, which is horrendously complex. And finally, I just want to show you a sort of banking example that brings it all together. I'll show this beautiful picture when the webinar catches up with us, which is a stunning place I think I'd actually kind of like to potentially live in, which is a photo of Queenstown, New Zealand. And the reason I'm showing that is because the example is actually from Bank of New Zealand, and they have this product, which is an online banking and digital banking product called UMoney, which is, when you start to see it, it sort of reminds you a little bit of like an iPhone screen with icons, but each icon is actually an account, and you can create an account on the fly, and you can use it for anything. You can use it to save money towards a goal, you can use it just to allocate something, you can use it just to organize yourself. And in this case, this person has a number of different accounts. The little green bar on it allows you to see your progress towards a goal. You drag and drop money from one thing to another thing, and you can then zoom in and get details on a particular account once you need to see individual transactions, for example. So it's a very interesting sort of change in paradigm of what's going on here into the just design and the nature of what, say, an account is. So those were just sort of some examples of these different layers. I think what starts to become particularly interesting is when we start to think about this in the context of not just these layers, but in devices, technologies, and behaviors that go with these innovations. And how can we understand these behaviors to allow us to serve our customers better? So let's start with just the one which is a sort of the elephant in the room, so to speak, which is the growth of smartphones and mobile phones. I got my first smartphone, I think, in about 1995, and not smartphone, normal phone, dumb phone, sorry. And I was one of 80 million people at the time around the world, and now we're at like 5.2 billion or so. And the growth of smartphones within that share is getting bigger and bigger and bigger. I think what's interesting about it when we start to think about mobile is that mobile is a sort of change in technology, because when we think about our users, mobile is really a behavior more than it is necessarily a thing. It's a behavior. It's changed our behavior a lot. On average, we spend, at least for US data, about 2.5 hours a day on our phones, and something like 77% of people watch TV with another device. When we look at millennials, though, it starts to get almost scary in terms of the level. The survey asked for the USA, my smartphone never leaves my side night or day. Well, 87% of millennials said that. When I wake up, the first thing I do is reach for my smartphone. Well, 80% said that. In the next 5 years, I believe everything will be done on my mobile device. Or 60% said that. I think that's the fascinating piece here. Like, are we ready for a world where everything is done on mobile within 5 years? Because this is what this group is now demanding. And I think the answer to that one is, you probably also know we're not ready, but let's see how we get there. So starting to think about devices and technology, we have our computer, our tablet, our smartphones. This is the world we're used to right now. What's happening is there's a whole bunch of new things starting to spread very rapidly out from those core three things. We have wearables, so the Apple Watches of the world, etc. And then we have a bunch of other type. I'll show you just examples of things I mean here. So, we've talked about smartwatches. We think ultimately a lot of us in financial services are using it as a sort of second screen really to our phone. It's very interesting things like payments, and we're starting to get a handle on that. I think what's interesting is the next set of things. So here, you can see on screen is a picture of Amazon's Echo. It's basically, think of it, Siri in a box on your desk. It's voice activated, only voice activated, internet connected, and it's very smart. So for example, I actually have one here on my desk in my office, and I can ask it a question. So I can say, Alexa, tell me a joke.
If April showers bring May flowers, what do May flowers bring? Pilgrims.
Sorry, I have to say it's not very good at humor because it obviously pulls in a rather PG joke. But the fact is, it recognized that I asked it for a joke and told me that. So I start to get very interested in how can things like voice devices affect what we do in banking. Could I just say to Alexa instead, pay Yama $100 for dinner last night, and that's connected to my peer-to-peer payments, and he gets paid. We're not even thinking necessarily about this kind of new world of devices that surround us and engage us all over the place. When we think about all these devices as well, I think one of the things that's very key to us when we think about innovation is, what are the enablers for all of these? They're not all unique. They all have an underlying layer of things that are common. They're all cloud enabled, everything's stored in the cloud, processed in the cloud. There are sort of three types of communication, really. There's sort of Wi-Fi, Bluetooth, and near-field communications for things like payments. The interactions are pretty much mouse, touch, or voice, or some combinations of, like smartphones are often voice and touch, for example, and they're delivered in only two ways, either via the web or via app stores, and that's our world. So when we start to think of these new devices, they're actually extensions from other places, and places we already are. There's also just some new stuff which I just find completely fascinating. It's a little bit of an aside. This lovely lady here is wearing basically a smart earphone that's just come out, which I find very interesting. It's called a Braggy Dash, I think is how you say it. But basically, it's an earphone that has all the connectivity. It has a touch, not screen, just a touch surface, so you can control it that way. It has a heart rate monitor in it, so for running and fitness. So this is a device that's with you all the time. It has all the technologies, standalone, and can connect to your smartphone. And so ultimately, you could just be walking down the street saying, "Pay Yelma $100," or tapping it 3 times to make a payment. So I'm not saying that this is the future, particularly of banking, but it just starts to make us really think about this continuum that we need to deal with. So, I'd leave this little segment by just saying that, we need to be designing a seamless experience for the multi-screen, multi-input method, multiple device world our customers inhabit. And we need to embrace the fact that customers are continuously switching between devices and channels. Too often we think of like, oh, mobile is separate from desktop. No, our data shows when we look at this for clients is that they're touching all these different devices, and this is what we really need to take away. The challenge when we come from this is that satisfaction levels today with banks are supposedly quite high. If you look at net promoter scores and things, for banks, they're actually pretty good most of the time, comparable to many other industries. But then when we ask a question such as, would you bank with a non-bank new entrant, like an Apple, Square, etc., we get almost half of people in North America saying, yes, they would. So if their satisfaction is so high, why are they saying, no, they wouldn't, or they would consider a new entrant? And again, millennials are leading the way. We have something like 77% of millennials saying they would do that. And when we talk about millennials even more, and dig down with a couple more questions here, it's like 53% of millennials think their bank is no different to other banks. 70% think the way we pay for things will be totally different in 5 years, and 33% think they won't even need a bank at all in 5 years. So again, a whole chunk of our potential future customers don't think we're important. So what can we do about this? How can we Uberize ourselves? While you're building longer term innovation, are there things we could do right now as well as just building that? What can we do? Well, the first thing I think is really important for us is to deliver an exceptional experience, a digital experience for most of the case, for prospects and customers right now. So that really means just doing better than we do today with the experiences we give our customers. And let me sort of show you a couple examples of what I mean here. So we all spend, in banking a lot of money on delivering beautiful branches. And a lot of people we try to reimagine these branches, etc. And here's a screen that's just beginning to appear of a bank here in the west coast of the US, called Umpqua Bank, which is renowned for having some nice branches, etc. And the question is, would you bank here? Well, clearly you would. I mean, it's a beautiful place. But functionally, let's think of it as, well, there's some tables, some chairs, some screens, some lights, and if you think about functionally only, that experience is not, you break it down. It's the same as this experience that I'm showing you now, this sort of deserted room that looked like some kind of drug den somewhere. It has a table, it has a chair, it has some lights. And the question is, would you bank here as well? Well, the answer would clearly be, well, you wouldn't bank here. But functionally, it's almost identical to the first place that you would bank in. So it becomes a little bit of a question of, when we move to digital experiences, why do we do the same thing? And I'm going to show an example here of actually one of my clients, and I'm showing the example because they're actually a really good bank, and I love my clients, and we've worked with them to change this. But this experience that I'm sort of showing now for an online banking experience for Bank of Oklahoma, a large regional bank here in the US, was what their experience was a year ago. And it's functionally good, like you could do everything you need to do, but it's not a great experience. There's nothing about it that makes you want to hang out here at all. And so the question again would be, would you bank here? And going back to our nice bronze versus drug den, I don't know. And this is not unique to Bank of Oklahoma. I just picked them out because I had access to the screenshot. But if you look at all the banks, and we spend a lot of time looking at online banking experiences for very large banks, very small banks, it's much of a muchness. They all sort of lack hierarchy, good design. They're all ultimately sort of core banking systems presented to the front end rather than an experience based on what a user needs to understand about their money. So we redesigned Bank of Oklahoma. It's completely changed the nature. So here is a screenshot that's showing up now of what it looks like today. Fully responsive across all devices, very sort of mobile first and touch first in terms of the amount of information being shown, everything. You just touch it to see more information, and really getting the things like the hierarchy right, so you can get a sense of what's most important and what isn't, what is less important within that experience. And then, start to look at some other experiences, like even on the public side. So I'm starting to show a screen here which is on video, so it might be a little jerky for people watching. But really, it's just this idea of an experience for potentially a commercial bank that is has video, full screen video running in the background, which I'm pretty sure you can't see on the webinar. But it just this idea that the best of design can be brought to something like commercial banking experience, lets us reimagine some of these experiences. I'll skip forward on that one because I think you can't see it with the delay. So I think one of the lessons for the experience section here is that, when we really think about digital experiences, the comparative set is not another bank. If it's another bank, it's the same as that screen before with all the same screens. The comparative set is the last app that your user opened. That's the way to think about this. It's, they were on Facebook 10 seconds ago, they were on Instagram 10 seconds ago, and then they come to you. Is your bank as easy to use as Instagram is? Probably not. So that is the comparative set we need to think about, and that's what's changed. And I think this is where, trying to deliver an experience quickly and lifting yourself from, tied to sort of core system structure and things like that is where things like, Backbase can really help. And this is where I definitely plug Yellow Backbase to think about how using a tool like Backbase could accelerate that process of delivering a great experience. So the second thing for Uberizing ourselves is, what else can we do now? Well, the second one is provide interfaces that customers can use to help them with financial insight and decision making. And let me give you some examples of what we mean by that. Whenever we look at the analytics for an online banking platform, we see a huge quantity of users come in, look at a balance and leave. And sometimes 30, 40, even 50% sometimes. They don't do anything. They look at the balance and they leave. Well, why are they doing that? Well, what they're doing is they're looking at the balance, not just to see what the balance is. They're doing it to understand something. Have they been paid? Has the payment gone out? How much money can they spend, on the shopping trip? They're trying to understand the information behind it, not the number in front. So what can we do to help them with this decision making? Well, here on Bank of Oklahoma, we just added, for example, a little squiggle chart of the balance over the last 30 days, so at least you can see a pattern of that. And then we did some other tools, for example. Another little case study here, another of my great clients, Newport Group, that delivers retirement planning, retirement plans and non-qualified tax plans such as deferred compensation plans here in the US. This was the experience before. Very functional, highly deep into the level of functionality, but not a great experience. And they'll tell you that as well if you talk to them. And this is kind of where we ended up. Again, very clean, dashboard-driven, kind of this idea of progressive disclosure. You click on a number to see more details, and there's much nicer interface and much easier to use. The functionality is staying pretty much underneath. But the insight piece is interesting. We rebuilt the sort of retirement planning tool to make it much easier to use. And what we found was that 23% of the people, the participants in these retirement plans, using the retirement planning tool, initiated some kind of action that led to a better outcome in retirement for them. So they added more money to their funds, they rebalanced, they changed their investments, they did something. So providing the information in a way that's helpful to the user drives a better outcome and action. So the last couple of ones, just to sort of wrap up here, are deliver seamlessly across devices and channels. I'm going to pick on Chase just because it's a good example. I know they're working on this, but here's a screenshot of their mobile app and their desktop. I mean, you wouldn't even know that you're in the same bank, let alone an experience across here. So just delivering seamlessly because we know users are crossing these channels continuously. And the final thing to think about here is that understand that innovation is a constant. It's not a destination. So once you've got somewhere, you're just at the beginning. It's always continuing. So a question for you all, do you use email to communicate with prospects and customers? And I'm sure the answer is 90.999% that you all do. And the reason I asked that question is that I was reading, believe it or not, the prospectus for the IPO for Match.com a few months ago, and Match.com, runs the big dating site. It also runs Tinder, which I'm sure you've all heard of, and I'm sure none of you use. So, basically, what was in their prospectus was, let's sort of swipe left here on Alison to get rid of her and show the prospectus piece. But basically, they said in their prospectus, and I'll read you the line. They said, as consumer habits evolve in the era of smartphones and messaging social networking apps, usage of email, particularly among our younger users, has declined. So they're saying a risk to their business is the fact that younger people, millennials, are not using email anymore. And, we're seeing this quite universally in that it's messaging apps now that are beginning to drive this communication. So if we can't email a user and they'll react to it when we have an alert or something, how does this change our business? What does it mean about the nature of our experience? So we have to really think about this from a, how can we deliver to these millennials in the way they want and keep innovating? I mean, I don't think we've even necessarily got a handle on doing email well yet. So that was it really from a, the essence of the material. So I wanted to wrap up with a couple of slides. So, can we get back to the beginning of the presentation where you talked about, could we innovate to the point where other banks or financial institutions are protesting our level of innovation because they're out of a job because we've done it so well? How do we do that? Can we drive towards that goal? And, we talked about these layers of innovation earlier on, the experience, delivery, product, and industry foundation layers, and how the more of these layers that you can innovate across and deliver on, the better it is in terms of the impact that you're going to have on your customers. And finally, what I wanted to do is just sort of wrap up with sort of 3 takeaways. The first one is that innovation can emerge at any layer within that layer cake, and the more layers you do, the more disruptive it is. Mobile is at the center of our lives today, but there's lots of these new devices like Echo and Voice and the silly earphones and, washing machines that talk to you, all these things that are beginning to be the sort of ubiquitous world. And ultimately, are we driving innovation towards this idea that banking is not somewhere a bank you go to, but it's something you do continuously in your world in a completely seamless way? And ultimately, I really strongly believe that delivering a great digital user experience is central to success. And it's even central to success for protection against innovators against you, because if you deliver a great experience, people will stick with you while you're sort of delivering the functional changes below. That's the takeaways. Feel free to reach out to me. It's just loading up the contacts here on the screen. You can reach me on Twitter and email, and then if you want to reach out to Extractable, because you'd like to work with us, just go to extractable.com, tweet us at Extractable, or give us a call. And if you're ever in San Francisco, swing by and you can have a nice coffee from our iced coffee machine that we have here. So, Yama?
Great, Simon. I'm very much looking forward to have another iced coffee with you. That's always something to look forward to. Thank you very much. I think that was a great insight. We will use the coming 10 minutes of the webinar to give a brief intro in Backbase and how we work together with Extractable to turn vision into reality. That's the beginning. And then we will, of course, have a short Q&A session. And as a short reminder, you can participate on Twitter, ask your questions there using hashtag Backbase, or use the GoToWebinar control panel on your screen to type a question using the chat or questions inbox field. Some people have been already asking questions. Thank you for that. I will make sure to address them in a few minutes. And also the number one question, of course, always is, will we receive the slides and recording? And the answer is yes. Everybody registered for this webinar will receive the slides and recording within 45 minutes after this 45 hours after this webinar. So within normally quicker even though. So without further ado, a quick big on Backbase, because why we're in the market and why we're talking with Extractable is because our visions are pretty much aligned. Simon had a great story about how customer behavior is changing and how that change is driven by companies like Amazon, like Uber, like Netflix. Those retail companies are delivering an instant, transparent, and personalized experience to customers. And above all, they do it anytime, any place, and on any device. And customers are getting those great customer experience from their most favorite firms, and more they're also expecting that from their bank and from their other financial institutions. So kind of bringing the Amazon or the Uber or Netflix-like customer experience to banking is what we do with our digital banking platform. And what's very important in that part is that indeed banking or just customer interaction is not just happening in one channel. It's happening more and more across different devices and different channels. One customer interacts with your financial institution using at least 3 different devices and channels over time. Not only to do complex business, but even accomplishing a simple task will normally happen across multiple devices. So getting that same brand experience across devices, facilitating handover across devices, seamlessly linking your mobile banking to your internet banking applications is key. And that's what we're doing here at Backbase. And of course, that's a very nice story. And I truly think Simon had a great presentation. It's really, these 3 key takeaways are essential for every financial services firm that wants to survive in the coming years. But it's very easy to realize that every journey starts with the customer, and we have to work to understand that customer and deliver a beautiful application on this device. But normally the hard work happens somewhere over here. It happens at the bank's level, where we have to take into account technology, systems, and processes that are normally very hard to change and also pretty much siloed. Because a typical banking landscape, even simplified, looks something like this. It is multiple online banking platforms, maybe even multiple banking apps. We saw it in Simon's Chase example, where you saw that beautiful mobile banking app everybody wanted to use, compared to the more traditional online banking platform, completely siloed, completely different way of working. Bringing that all together into one seamless experience is key. But we believe that's the future. With a seamless customer experience platform that does application integration in the backend, and on the top delivers that Amazon-like or Netflix-like banking experience. This means superior, personal, relevant, fast and frictionless, but above all working anytime, any place, on any device is key. And that's the future of banking. We do that. We do that with our digital banking platform called Backbase DBP, where actually we deliver a complete bank box services that takes care of that omni-channel orchestration to make sure we can do handover between the different channels, where we have a visual editor where you're in full control over your digital banking experience and actually can do targeting, A/B testing on mobile devices in your internet banking environment and enable full control. And of course, it's all running on your backend services. So in short, we have user experience accelerators, making sure you can deliver a complete out-of-the-box bank for your retail, wealth, and commercial banking customers. And of course, these are accelerators, so these are building blocks. This is Lego that enables you to create a beautiful customer experience quickly. But of course, the digital experience needs to be fully in line with your personal style and your personal look and feel, completely in line with what Simon was telling. Secondly, it needs a strong orchestration layer, making sure you can deliver on any device. Currently, we're talking smartphones and tablets, but as Simon already addressed, in the future we'll be talking wearables. Maybe a bank needs to work with the Amazon Echo, and you have to say, Alexa, please transfer some money, or what's my balance, or when is my credit card bill due? We don't know what the future of banking is, so having a unified architecture that is ready for the future, that's agile, is key. Next to being agile, of course, having control is key. If you are dependent on a software vendor or dependent on an IT team to deliver your digital experiences or to innovate in the digital channel, that's pretty much outdated. As a marketing team within a bank, you want to take control over the digital experience. You want to interact with customers anytime, any place, on any device. So having a visual editor, a CXP manager, as we call it, where content managers, digital marketers and product owners within the bank can manage the end user experience is key. Of course, this has to run on a very strong API layer that can hook on directly into your core systems, unify everything in our digital banking services, and has then an API to integrate in the CX layer, also making sure you can work with best of breed services via an open banking marketplace. Nobody knows what the future is going to be, so standardizing on one part is never good. But having the flexibility to have a delivery platform that acts like a hub, where you can mix and match all those fintech startups or those fintech disruptors that are bringing power to the consumer, but also power to banks if you're able to partner. And having the capability as an FI to partner with those fintech disruptors is key. And via an open banking marketplace approach, that's very much possible, and that future is not that far away. So we're Backbase, we're a software company. Gartner labels us the most visionary vendor when it comes to horizontal portals in their latest Magic Quadrant. Forrester names us the leader in omni-channel digital banking. They recently published a new Forrester Wave, actually the first Forrester Wave, indicating how important omni-channel banking currently is. Where Backbase is strongly positioned as that leader in that quadrant. But above all, we help 60 plus financial services, from very small credit unions to some of the larger banks in the world, to become digital leaders. That's our main purpose. We're Backbase, and we're on a mission to make you, as an FI, a digital leader. That starts here, that starts today with optimization and simplification of your IT stack. So you can move to an agile approach where you can test and work and have that lean startup approach and delivering better customer experiences on any device. But all our customers are embarking on a digital transformation program where the end goal is, let's say, the 2020 table stakes is to work to a journey where you can do continuously innovation. Always be ready, whatever the future is and whatever the market is going to bring us. So without further ado, I'd like to move to the Q&A. I already received quite a lot of questions, and I like your interaction. I also will be monitoring Twitter throughout, so don't worry. If you have a question and you post it on Twitter, I will also read that. And if we are not able to answer your question in time, I will make sure that we have your contact details and reach out to you pretty quickly after the webinar. Simon, the first question is mostly addressed to you. It's about kind of the Internet of Things approach. Is that really a hype currently, or do you really believe that the Internet of Things is something banks have to put in their strategy already at this moment?
Oh, that's a good question. There is definitely a certain amount of hype and a certain amount of, oh my God, look at this new cool thing. I mean, just as I got excited by those kind of ridiculous headphones things, and I'm sure I'd buy them and use them for a week and not use them again. However, I think the underlying trends of the Internet of Things is very important. And I think that banks need to be thinking about it experientially as to what does it mean to be a bank? Like, what does it mean to deliver banking services to somebody? You know, if we are surrounded by these types of devices that are, you know, all over everything, just anywhere in your house you can talk to a device and you get an answer, then people will expect to be able to do basic banking services and finance and planning in those environments. And they're the kinds of things that you can't just do tomorrow. You know, you can't just add it in. And we need to think about what could this world look like, and what do we need to be building in today to enable that. I don't think we should all be trying to work out how to you know, integrate with a Nest thermostat so that, you know, if you're a little short on money, it tells you to turn down the heat a little bit so your gas bill is lower. And then, you know, these are sort of things that in theory are possible. I just don't think they're useful use cases. But the ability that when I'm walking through my house and it's all wired for sound, I can say, oh God, I forgot to pay my Visa bill. You know, what's my Visa bill and can I pay it now? And somehow I get an answer to that. And some could be a very compelling experiential piece for a bank in the future, and it's delivered via these types of technologies and tools and interfaces. And we need to think about that because, you know, I can guarantee you pretty much no bank has thought about, like, a few maybe have really thought about voice interfaces from a, you know, smart devices point of view. So yes, there's a lot of hype, and a lot of it is, you know, unjustified, but there is definitely an underlying piece that I think the Internet of Things is critically important to the future of banking, but also all these other types of services. I mean, as I said, I work in places like healthcare as well, where I can see a lot of potentially positive use for this.
Clear. And let's stay a little bit on the topic of hypes. One of the big hypes in banking the past year was, of course, big data. That's just a container term, of course. Can you share a bit how big data or contextual information, or at least information about consumers and their behavior, is applicable in this new digital world, and how we can realistically use it, let's say, this year?
Definitely, the this year piece changes the nature of the question a little bit, but we're definitely seeing it on the, what I would say is a sort of the insights and personalization side of things. So a good example, I use Newport, the retirement example I showed there before. After we launched the first generation of that site, we put in place a very detailed analytics platform that has huge amounts of data and could definitely be called a sort of big data solution, and it has all the behaviors of things. And we went back and we looked at, over the previous year, all of the market activity. So, the S&P 500 and NASDAQ and whatever, and all the ups and downs and the percentages of increase and decrease and on every particular day. And then we went and looked at user behavior and looked for correlations between that. So what we found was, not too surprising, but it was nice to prove it, was that when the market is up, people log in more and look at their balance and look how their investments are doing because they're doing better, and it's a sort of positive cycle. And then on the other side, when the market was down, they logged in less and looked less because they were avoiding the truth potentially. And what we found was the bigger the rise, the bigger the fall, the more pronounced the change was. And then when we dug further, we found that particularly when the market was up aggressively, people were maybe starting to make some bad choices. A retirement fund, you shouldn't be day trading in a retirement fund, but there were some people that were, going to more risky investments because the market was up, and it's not necessarily the best plan. So we found this insight. Now the question is, what do we do with it? And part of what we're looking at trying to do, and haven't implemented yet, but it's part of this ongoing, how can we use big data, and we could do it now, is start to message, if the market is up aggressively, we personalize that experience when someone logs in and goes to rebalance their account to higher risk. We can say, here's a bunch of data that shows that this is not a good idea, and here's some articles about it, et cetera, et cetera. But we'd only show that message if the market was up 5% or something, or the same if it was down too aggressively. And I think that's an example of how using insight from big data can help users make better decisions for their finances, because a lot of the time people just don't have all of the patterns and data, and they make emotional decisions, and we can help them. I'm not trying to be overly paternalistic, we're just presenting them with the information that helps them make a better choice. And by doing things like that, I think big data can really help people, and it's things like that we can do now because we have the tools, we have the personalization tools, we have the kind of analytics tools. I think when you get bigger into the world of big data, of spotting patterns across whole populations of people, again, there's a huge opportunity there. I think that stuff is a little bit further out from the practicality of day to day, but definitely using data about people and their behaviors and helping them make better decisions is a key part of big data today.
Clear. And then, of course, mobile brings in a whole lot of other opportunities where you have the geo data as well. Can you do location-based targeting and has that higher level of interaction with your customer? As most people said, and also you showed that Millennial research, a few times already this year I forgot my phone, so my wallet somewhere, but I always had my phone with me. How do you see that shift in customer interaction changing the priorities for banks at this moment?
Oh, it's huge. I mean, we have a number of bank customers where the percentage of interactions with the bank that are, step back. First of all the digital interactions, so if you include ATM, mobile, and web, are something like 80 to 90% of all interactions already. Branch and phone are already, 10% or below. And then within that, we're seeing quite a few banks where the mobile app now is more than 50% of those interactions. So half of the digital interactions are already happening on mobile. And I think, as you mentioned, there's a difference in a mobile device in that it's a personal device. It's much more intimate to you, and much more, your whole life is on it, in a way that even your own personal computer on a desktop or even a laptop isn't the same kind of device. It's a functional tool. You are emotionally attached to your phone because it's your whole life. It's all your communications. It's all your social life. It's everything. I sort of break out in a cold sweat almost if I left my phone in another room, let alone walk out the house without it, for example. So there's that level of intimacy. And again, your finances are an intimate part of your life. And if we're not part of that in a way that people want to interact with you, then you're going to be left out by someone that is. You're going to be sort of kicked out by the competition that is doing that. And yes, there's a whole bunch of stuff in mobile that we have extra tools, like here in the US, the mobile check deposit, or taking a picture of the check is a huge feature that people like. The geolocation, a bunch of other things like that. I still feel we're in a sort of a first or second generation of these kinds of apps. I think there's still a lot of places this can go, particularly when it starts to interact with other apps that you have. So, when you're doing mobile payments and sort of contactless payments, and when you're doing social and things like that, where the finances can interact with other apps and start to give you richer data about what you're doing in life, and suggesting things and helping you. There's another whole range there. And if we get permission, in essence, from the user, because these are very intimate devices, to help them in other parts of their life, I think we can increase the stickiness, the share of wallet, all of these kind of things with users. And mobile is so critical to that. And I think it'll remain central to life as long as these devices exist in their sort of similar form as they do today.
Totally agree. I like your recap in that area. I realized that we're almost at the hour. So before we close down the webinar, Simon, what's the number one recommendation you will give to the audience if they'll start work this afternoon or tomorrow morning again? What should they do to make life easier for the customer? What can they do to embark on the journey of digital transformation quicker and better?
I think there's sort of two things, I would say, not the one thing. I'll answer it two things. One is think much bigger than you do today. So, unfortunately, so many banks and things, large institutions are siloed within structures internally and things like that. But you really got to say to yourself, if I was a startup trying to disrupt the organization I work for, how would I be doing that? And try and do it yourself, because otherwise someone else will. But that's a sort of a longer term piece. In the short term, I really think it's delivering a really good customer experience within what you have today and pushing that as far as you can, because the experience, a good experience, will really make a customer happier, even than extra functionality, if you can deliver that. And a lot of people sort of give experience, particularly digital experience, sort of second string to physical experiences. We spend fortunes on beautiful branches and things, but don't spend the same amount of money on what is the biggest branch in the world by far, which is your online banking. So, I would say get the experience right and try and disrupt yourself.
Great. Simon Mathews of Extractable, thank you very much for those great insights today. And thanks to everybody that's attending this webinar live. We had a record number of attendees, almost breaking the limit on our GoToWebinar subscription. So thank you all for participating. And again, Simon, thank you. I will make sure to share the slides and recording with everybody within 48 hours after this webinar. And of course, you will all receive an invite for the next one coming up. Have a great day, evening, or morning, wherever you are on the globe. Thank you very much.